Hello friends, welcome to my YouTube channel. So in this video I am going to discuss the buyback of announced by one of the largest IT companies in India, the TCS Ltd. It announced a buyback in October 2020 at the price of 3,000 rupees. So the record date for the buyback is 28 November, that is next Saturday. And I will actually explain in the video what is the possible entitlement ratio, acceptance ratio, what can be the possible returns that investor can expect, and what is future prospects of TCS Limited. So request you to watch the video till the end. So give an overview of the buyback. That is TCS, India's largest IT company in terms of revenues and employees. It serves clients across continents. Announced a buyback of 3,000 rupees by tender offer. Here are the buyback details. The buyback is via tender offer. The record date is 28th November. So that is next Saturday. So since the buyback is next Saturday, if you want to be eligible for buyback, you should be buying the shares by Wednesday max, because if we are actually buying on Thursday, we will not be eligible for the shares will be credited in T plus 2 days, will not be credited by Saturday, since Saturday is not a working day. So it is likely to that we will not be eligible for buyback. We buy on Thursday. So you should be buying the shares either on Monday or Tuesday on a safer side, because if we are actually buying on Wednesday, if there is a late delivery, will not be credited the shares on Friday. So the buyback offer amount is 16,000 crores, and the date of board meeting was and the announcement was also on 7th October. And the buyback offer is 1.43%, and the total number of shares that we bought back is 5.33 crores. And out of this, 15% of this shares would be reserved for retail shareholders. So the price type is tender offer, and the buyback price is 3,000 per equity shares. Regarding the tender offer, what the company will do is that they will actually announce a record date, and based on the number of shareholders who actually held the shares, and based on the number of shares that will be bought back with the company will actually decide the entitlement ratio for the shareholders, say maybe 30% or so, and then they will actually email the shareholders, and they will be actually announcing a starting date and date for the buyback of tender offer the user shares, and the shareholders can actually, based on the number of shares held by the record date, they can tender the shares. For example, if a person is actually having 100 shares and the tender ratio is 60 shares, and the eligibility entitlement ratio is 15 shares, so they can tender 10 shares or 15 shares. So whatever is accepted, then actually based on the acceptance ratio, the TCS would actually credit the shares at the price of 3,000 rupees on the end of the buyback period. So that is the way the tender offer will work. So before going to the details of the buyback, so I will actually give an overview of the earnings of the history of the buyback. Currently, TCS is trading at around 2,660 levels. Market cap is 9,98,228 crores. So it is one of the companies with the after Reliance, I think it is the second largest company in the terms of market cap. The price earnings multiple is around 32 times, and the book value is 254, and the dividend is 1.24%. High and low price of the company is 2885 and 1504. Return on capital is 47.8%, which is a good rate, and the return on equity is 37.3%, and the face value is 1. The amount of sales growth for 10 years is 18%, 5 years is 11%, and 3 years 10% is considered good. The amount of profit growth at 10 years is 17%, the 5 years it is 11%, and 3 years 7%. And for the stock price, CAGR returns for 10 years is 18%, 5 years it is 18%, 3 years is 26%, and the last 1 year is 28%, also considered good. The return on equity is for 10 years is 37%, 5 years it's 25%, 35%, and 3 years 35%, last year it 37%. This means that the TCS stock is also giving a return to shareholders in the exchanges also, in addition to earning growth. So let's see the price chart of TCS in the last 1 year. So TCS was trading at around 2040 levels in December 2019. It had announced a buyback last year also at the price of 2,100. So acceptance ratio for the last buyback was around 100 rupees, because most of the shareholder made tender the buybacks, and the share actually went from 1,800 to 2,100 at the time of the buyback itself, and it was actually trading at around 2,200 in February levels. And due to COVID pandemic, since due to the global stock market collapse, the stock price of TCS also fell to around 1,660 levels, and it actually started recovering once the global economy and the Indian economy started to recover, and the IT spending started increasing. So it started moving up again, and the clients started spending more on IT, and the stock price touched a level of 2016 July, and it touched 2400 levels in September, and it made a high from 2008 in October. So due to the announcement of the buyback, it had a correction, now trading around 2650 levels. So the buyback is around 3000 rupees. So I will give an overview of the earnings also of TCS in the last 2 years, and if you see the quarterly results of TCS, it was actually had a sales of around 30,904 in December 2017. It improved over the last 2 years. It was around 37,338 in December 2018. Further, it improved to around 38,322 in the June quarter. In the last quarter, it is around 40,135 crores. So the June quarter was impacted due to COVID pandemic. If you see, the operating profit was around 8,287 crores in December 2017. It was around 10,083 crores in December 2018. It has improved to around 11,513 crores in the current quarter. So the operating profit has increased around 3,000 crores in the last 2 years itself. And regarding the net profit, it was around 6,531 crores in December 2017, improved to around 8,105 crores in December 2018, further improved to around 8,118 crores in December 2019. The last quarter, this September quarter, it was around 7,475 crores. So the net profit has improved around 900 crores in the last 2 years. So if you see the EPS if you see the yearly profit of the company, the sales was just 27,809 crores in 2009. It improved over the years, and it was around 62,989 crores in 2013. It further improved to around 1,17,966 in 2017. It was around 1,56,949 in 2020. It is expected to be around 1,58,000 crores in the 2021. Regarding the operating profit, it was 6,388 crores in 2009. It improved over the years, and it was around 14,435 crores in 2012. It improved to around 24,482 crores in 2015, to around 32,516 crores in 2018. It is expected to be around 43,380 crores this year. So the profit has risen around more than 6 times in the last 10 years. If you see the net profit, it was just 5,256 crores in 2009. It was around 13,917 crores in 2013. It improved to around 24,270 crores in 2016. It was around 32,340 crores in 2020. Expected to be around 30,360 crores in 2021. So the results, the profit also improved around 5-6 times in the last 10 years. If you see the EPS, it has improved from 13.43 to around 48 in 2014, further to around 67 in 2018. It was around 81.68 in the 2021, expected to be around 82 in the FY21. So if you see the balance sheet, the equity capital has increased in the last 2 years after the announcement of 1:1 bonus in 2018. And the equity capital is around 375 crores in September quarter. And the reserves are around 94,762 crores. So due to huge reserves of around cash flow of around 10,000 to 15,000 crores every year, we can actually expect more buybacks and bonus issues and good dividends from the TCS in the future also. And regarding the shareholding pattern, the shareholding promoters hold around 72%, and the FIS holding is 16%. The domestic institution holding is 7.85%, and the public holding is just 4.03%. So regarding the expectations for the buyback, now regarding the TCS, the buyback is done at slightly higher valuations as compared to Wipro. It is done at around 3,000 rupees. So this is the EPS is expected FY21 is just 78 to 80 rupees. It's actually buyback is at a price of 35 to 37 times FY21 EPS, which look expensive. But TCS is normally traded at higher valuations as compared to other IT companies. Since the largest IT company in India is trading at around, it is normally traded at around 25 to 30 times EPS. So this valuation is somewhat justified, though it is slightly expensive. So in the last year, in 2019, it had a buyback at 2,100 levels, but it had an acceptance ratio of 100%. So the current buyback is likely to have an acceptance ratio anywhere in the range of 30 to 60% based on the stock price movement before the buyback and the shareholders who are willing to tender the shares. So it is the largest IT company in India in terms of employees and revenues. It has history of rewarding shareholders in the terms of dividend, bonus issues, buyback, etc. It is more likely in future also, as explained by me earlier. So it is for a shareholder who is actually willing to accept in buyback, they can actually get returns in the terms of some shares accept in the buyback. but there is a possibility of the stock price correcting also after the buyback. So if we are actually willing to hold for long term, we can actually stay invested. We can actually expect around 3,200 to 3,500 levels in the next 2 to 3 years in TCS. But if you are actually looking for short-term gains, gains are likely to occur only in the terms of buyback, those shares which are as well in the buyback. But if there is any correction, it is advised to keep a stop loss, so that if there is a possibility that the stock price may actually reach 3,000 levels also in the next 6 months. But in case there is a correction due to valuation concern also, it is likely that it is better to keep a stop loss and accumulate more at the lower levels for the balance sheet that is not accepted in the buyback. So I will actually, I had done a rough calculation on that possible acceptance for the buyback. So the total buyback is for 16,000 crores. So the price is at 3,000 rupees. The total quantity of buyback is 5.33 crore shares. Retail buyback is 15%, that is 80 lakh shares. But the thing is that the 2 lakh only shareholders who tell shares till 2 lakh shares will be eligible for buyback. So if you're actually buying shares till 66 shares, you'll be eligible for consideration as retail shareholder. So retail shareholders, as per the annual report, those who held shares up to 100 shares is 22 crore shares are actually held by retail shareholders. So based on that ratio, that's the entitlement ratio comes to around 39.7%. But many shareholders might have bought shares of TCS after the announcement of buyback. So this particular total shareholders may have increased. So the entitlement ratio is likely to be around 30%, 30-35%. And based on this entitlement ratio, the company will actually send a notice to shareholders, but the final acceptance ratio is likely to be higher because those shareholders who actually bought TCS for the long term, maybe at lower levels around 1,000 to the 500 levels 5 years back, may not be tendering the shares. They will be tendering only partial shares. Say they are actually, if they are holding 100 shares, they may be selling only 50 shares. So the acceptance ratio is likely to be higher than entitlement ratio. It's likely to be around 40 to 50%. So based on the rough calculation of acceptance ratio of 40%, if you're actually investing 25 shares of TCS at the current price of 2,650, the total investment is 66,250, and if the acceptance is 10%, 40% means that 10 shares will be accepted in the buyback, and the total value, if we are actually selling the balance shares at 2,650, the total value would be 39,750 plus 30,000 rupees, that is 69,750. We are actually gaining 3,500 rupees. So if you are actually holding shares and we are actually waiting for 3 to 6 months, if the share price touches 2,800, if you are actually selling the balance shares not accepting the buyback 2,800, the total value would be 42,000 plus 30,000, that is we are actually gaining 5,750 rupees. Suppose we are actually holding for a longer period, in 5-6 months to 1 year, and the share price touch 3,000, and if we are actually selling the balance shares at 3,000 rupees, our gain would be 8,750 rupees. So if you're actually having having acceptance ratio 50%, 12 shares will be accepted in the buyback, and the total for the balance shares we are selling 2,650, the total value would be 7,450. So we are gaining 4,200 rupees. So if you're actually selling the balance shares at 2,800, we'll be gaining 6,150 rupees. And if you're actually holding for 6 months to 1 year period, if you're selling the balance shares at 3,000 rupees, our gain will be 8,750 rupees. So if you're actually holding for long term, I think the TCS buyback is a good option for investors, but it is, since the balances are slightly expensive, it is advised to keep a stop loss for the balance shares. And if we are actually holding for long term, I feel that considering the earnings growth that TCS report in the long term, we are actually likely to get good returns in TCS in future also. But short term, due to valuation concern, there can be a correction, but there is a possibility that the stock price can actually touch 3,000 level also. So it is advised to keep a stop loss for the balance sheet that that is not accepted in the buyback. So if you like the video, please subscribe. Please give a like for this particular video and subscribe to my YouTube channel so I can actually post new videos regarding multi-bagger stock areas. I am also planning to invest in this company TCS for the buyback investment. And please read to the disclaimer of this page also before exiting the video. Thank you for watching the presentation again.